So I think I start now. Very welcome to this morning's Fondforum. Today we're talking about sustainability disclosures and especially the new UK legislation. And the background for this webinar is that the Commission has sent out a consultation to reform the SFDR. Now there will be a lot of technical definitions here in this webinar. But anyway, so even if that's a new regulation, it seems obvious for a lot of participants in the financial markets that they already need adjustments. The SFDR is very complex. It's very much information that is given to investors, and also there's a lack of definitions of central parts of the regulation that is really needed to make it possible to compare different products in the financial markets. So, and one new thing in this consultation is also that they have consulted on a categorization of funds. And what is often misunderstood is that today's SFDR regulation is not a classification system. It's more like a way of categorizing, not categorizing funds. It's more like putting different information standards on different types of funds. So now instead they are consulting on a categorization system of 4 different categories. And this is exactly what is being introduced in the UK market. So therefore, we think that the UK regulations will be an inspiration for the coming European legislation. And therefore, it's also very interesting to get some comments from the UK market. And for this discussions today, we have invited Carol Thomas. She's the head of sustainability and responsibility investments at the Investment Association, our colleagues from the UK. And also we have invited Sandell, who is maybe the most experienced person in Sweden on eco-labels of financial products. So very welcome to you. And with us today, we were supposed to have Angelica, my colleague as well, but she caught the flu the other day, so she will not participate today. We are recording this session and we'll put it on the webpage. And also Carol promised us to be able to share her slides afterwards also, if there is someone who are interested in those. We also have a possibility of Q&A. So if you have any comments or questions to the speakers, you can use the Q&A, and I will curate the questions and try to find a good timing for the discussions to put them forward to Carol and Per. So with that, Carol, very welcome. And I'm really happy that you got up so early this morning in UK and participated in this meeting. You promised us to give an oversight over the new British legislation. The floor is yours. Thank you.
Good morning. Thank you, Fredrik. I'm just going to share some slides. Bear with me a second. Okay, can everybody see the slides okay?
Yeah, super. Works very well. Thank you.
So yes, good morning. Thank you. It's a pleasure to be with you this morning. As Fredrik said, the aim for me today is to outline the new UK Sustainable Disclosure Requirement rules. But as I go through it, what I want to be doing is giving you a flavour of the issues or the challenges members have been speaking to us about since it got published in November. So the final rules got published at the end of November. I think there's 3 things that's important to state, first of all, this morning. It really is a landmark moment in the UK for ESG legislation. You know, as you know, UK funds have not implemented SFDR. So we have been waiting for these rules for quite a few years. huge extensive engagement with the regulator. And I have to say, it's been a really, really good open engagement with the regulator over the last few years. And indeed, you could say a good way of doing regulation. Lots of work for our members, UK asset managers going forward for this year, and of course, opportunities. I would say the scope is narrower than expected in the final rules, but I'll go on to talk about that now. The scope, all FCA authorised firms are in scope of the anti-greenwashing rule, and the rest of the regime, so the labels, the rest of the regime applies to asset managers and also distributors. It does not apply, the labels themselves don't apply to portfolio managers, seg mandates, or pension schemes or insurance-based investment products at the moment. We are expecting consultation from the FCA shortly in the coming months on the portfolio management and seg mandate, but we're probably a little while away yet before we see an extension for the pension products and other insurance-based investment products. There on the right of the screen, it's the final package basically includes those elements, and it's these elements that I'm just going to take you through this morning and go through just some of the issues that firms are grappling with in terms of implementation. So an anti-greenwashing rule, we've got the labels, we've got naming and marketing rules, we've got disclosure on various different levels, consumer-facing, detailed, and then certain requirements for distributors, in particular requirements with overseas funds being distributed in the UK as well. So starting off with the anti-greenwashing rule, the anti-greenwashing rule, different to the labels in that it applies to any FCA authorised firm communicating with clients. The FCA have been clear to state from the very beginning that the anti-greenwashing rule is not new. It's clearly restating in a more targeted place in the FCA rulebook previous communications rules and guidance that they've issued over the past number of years. Basically, any reference to environmental or social characteristics of a product service in a communication must be consistent with the environmental or social characteristic of a product or service and fair, clear, and not misleading. When can we expect this rule to apply from? At the moment, the FCA have a date of the 31st of May 2024 for when it comes into force. The reason I say at the moment, that is in rule now. The FCA are consulting at the moment on guidance to help firms apply the anti-greenwashing rule. And there's a deadline of, what date is today, the 20th? There's a deadline of tomorrow, the 26th of January, to respond to that. And actually in that response, we're asking for a delay of the implementation of the anti-greenwashing rule to the end of the year. And I'll go through the timeline in a little while, but the naming and marketing rules do not come into force until December. So there's 6 months when the anti-greenwashing rule is in force. Until then, the naming and marketing rules, and firms are worried from a regulatory supervision perspective, what happens in those 6 months when their naming and marketing rules are not up to the level of the new rules in that period. So that's why we're asking for a delay, that everything is streamlined in terms of dates. Just the picture or the illustration on the right. So firms need to ensure that any sustainability related claims are correct, capable of being substantiated, that they're clear, clearly presented, complete, fair and meaningful in relation to any comparisons to other products or services. So naturally, nothing there that we would disagree with, and very consistent with the supervisory approach that the regulator has had over a number of years. So the labels themselves, we have 4 labels. The labels are, and I will say the name of the labels has changed in the final rules. So where we have sustainability focus, etc., we had sustainable focus, sustainable improvers in the consultation. They changed it to sustainability as a result of consumer testing. And, you know, we can see why, while it doesn't flow as easily, sustainable indicates that it is sustainable at the point, whereas sustainability fared better in consumer testing in terms of understanding. The labels are used for products which there's a bar much higher than SFDR. So the product has to have a specific sustainability objective as part of the investment objectives, and to meet high standards and robust criteria to deliver the sustainability objective. I will say that this is a voluntary regime, and indeed for our response to the SFDR consultation, we very much support any regime being voluntary. That said, I think, and already, even yesterday, we are hearing from our firms pressure, and indeed, we saw it with SFDR, pressure from distributors to the asset manager that a label is on their product. The sustainability focus, so that's to invest in assets that are environmentally or socially sustainable now. The improver category, that's very much to capture the funds investing in firms that are in transition, which we know was a call from the industry to the European Commission for a version 2.0 of SFDR. Sustainability impact, so that's to achieve a predefined positive measurable environmental or social impact. And the mixed goals label. So the mixed goals label was new. It was not consulted on, but the FCA, we very much fed back that fund of funds, mixed asset funds would find it very difficult to get a label under the other three. So the FCA have come up with a mixed goal. So that's for blended strategies. And we very much do welcome that. I think I would say there was a surprise when the final rules came out. The FCA have said that industry can apply these labels from the 31st of July. And I think there was a surprise because they always said that the industry would get a year. Now, while these are voluntary, we know there's going to be a commercial incentive for firms to try and hit that July deadline. I would say when the rules came out in November, we definitely got the impression that a lot of firms would try and reach that date of July to get their funds labels on the funds. 2 months on, definitely there's been a bit more of a let's sit back, take time to absorb the rules. There will definitely be some firms hitting that July date, but there are also firms that will go aim to get a label between in the second half of the year, and definitely some waiting for next year. In terms of which labels we think will be most popular initially, I think we're getting the impression the sustainability focus will probably be the most popular, followed by sustainability mixed goals, and indeed Morningstar have come out with some research indicating that as well. Followed then by improvers and then sustainability impact. Just going a little bit on the exact.
Karen, may I just ask you, do you have any idea how big a proportion of the UK funds will you expect to try to categorize themselves?
Sure. So the FCA in their policy statement stated that 45% of UK authorised funds that have sustainability related terms in their naming and marketing would get an investment label. Now, I think that's a bit high. Definitely, I think while there might be 45% of sustainability related names and terms in the naming and marketing, I'm not sure all of them are. Definitely, we will not see 45% of the market getting labels today this year. Definitely not. We may end up there maybe in a year or two, but I don't think we'll see it straight away.
Sorry, and the proportion that of the funds that are using sustainability names and marketing, how big is that in the UK market?
So I think the Morningstar data came out that we estimate, they said 300 UK open-ended and closed-ended funds will opt for a label. That represents 8% of funds domiciled in the UK, and less than 3% of all funds in the UK.
So it's a 45% out of 8%, so to say.
Yes.
Around.
Yeah. So it's not that many, because that bar is very high as well in the UK in terms of that needing to have that sustainability objective as part of the investment objectives.
Okay.
I definitely, the FCA have had second mover advantage in terms of developing rules following SFDR. And that's why they really have set the bar high. And you will see a lot of, you cannot presume that Article 8 funds, I should clarify, overseas funds being marketed in the UK cannot use the labelling regime at the moment. We are waiting for Treasury to come out with an overseas funds regime to see how SDR will apply to overseas funds. But if you did have an Article 8 fund, for example, and then you had a UK equivalent OIC, you can't presume that Article 8 would automatically get a label because the bar is much higher. One difference compared to the rules that were consulted on, the FCA had initially said only the focus category would need 70%, would need a threshold of 70%. The final rules, the 70% threshold applies across all 4 labels now. Naturally, there's KPIs that need to measure progress against sustainability objective. You need to have appropriate arrangements to support delivery of the sustainability objective. And stewardship, you need to identify and disclose the stewardship strategy needed to support delivery of the sustainability objective. I will say that in terms of independent verification, the FCA had initially in the consultation asked should there be third-party verification of the labels. And we as an industry body said firms shouldn't be mandated to use third-party verification. They can if they choose, but they shouldn't be mandated. So the final rules state that firms can have third-party verification or internal independent verification. But then the big question now firms are grappling with is, what does independent mean? If you've got a risk and compliance function, do you have a separate team? Firms won't have separate teams dedicated to just independently verifying. So then they've got similar reporting lines up. So firms are just working out what does that independent mean. And I think we may see maybe particularly smaller firms outsourcing to third-party verification. So I think that will be an interesting one to watch over the coming year or two, that industry in terms of that independent verification. And, I was just at one of the big 4, auditing consultancy firms yesterday speaking, and, it's clear that many are seeing this as an opportunity as well, which is fair. So the naming and marketing rules, the naming and marketing rules consulted on over a year ago were very restrictive. And in terms of, they were really restricting the sustainability related terms that could be used in naming and marketing. We were so worried that it would result in what we were describing green bleaching, that there would be genuine sustainability characteristics within funds that firms just wouldn't be able to talk about because of the strict naming and marketing rules. So to be fair to the regulator, they did very much roll back on those strict naming and marketing rules. But what they've decided to do, they've said, you can continue to have ESG related and sustainability related terms in your naming and marketing, but you then have to apply all the disclosure requirements as if you were getting a label. So what we're seeing now is really 3 buckets: labeled funds, non-labeled funds split into 2 buckets, non-labeled funds that will have to have, with sustainability related terms, that will have to have all the disclosure requirements, which I'll go through in a minute, and non-labeled funds with no sustainability characteristics at all. So just on the naming, so the product name must accurately reflect the sustainability characteristics. They have restricted 3 terms, the use of sustainable, sustainability, and impact in the naming. You can have it if you're a labeled fund, but you cannot use those terms if you don't have a label. Sustainability characteristics should be material to the product. So it has to be at least 70% having sustainability characteristics. And as I say, you cannot use sustainable or impact in the name. For the marketing, firms must meet the anti-greenwashing rule, which is fair enough. You have to produce the same type of disclosures for labeled products so consumers have consistent information. If you're not getting a label, firms have to put on their documentation, you have to publish a statement in a prominent place explaining why the product doesn't have a label. Now, the exceptions are, so when using terms in other contexts, such as financial impact, and when making short, factual, non-promotional statements. So, for example, Firm X, its sustainability product reports annually. I think what firms are grappling with now is what constitutes a short, factual statement and those parameters. Again, it goes back to, the industry asked for more principle-based approach. Now that the FCA have given us it, now industry has to look at what are the parameters around that, and we as an industry body will be helping members with guidance on that. I will say that I think the FCA allowing firms to continue using sustainability related terms in naming and marketing, I think it means we're probably not going to see that race to green that we saw in March 2021 with SFDR, where just firms race to get, we know they're not labels or categories, but race to get Article 8 and 9 status, for want of a better word. I say that, and yet, I just spoke to a firm yesterday, and they have an Irish domiciled fund that they market into the UK to UK retail investors. And the distributor said, unless you put a label on that fund, we're not going to market it. And they can't get a label for it. The STR regime does not apply to overseas funds. So, and I'll get on to distributors in a minute, but there's a huge education piece to be done for the distribution chain as well. Just lastly on the naming and marketing, one thing that did get removed, the FCA had originally proposed that firms would have to declare in fund documentation unexpected investments. So in terms of marketing, if you've got a labeled fund, is there anything in there that would not align with the sustainability objectives, such as investing in fossil fuels, etc.? They rolled back, but in one way, you don't have to have a section on expected investments, but you do have to clearly state if there is anything within the fund that firms would go counter the sustainability objective. Just briefly on the disclosure requirements. So, I think you're going to see parallels really to what is required under other pieces of legislation. There's more of a layered approach to SDR than maybe SFDR. So you've got consumer facing. Did you want to come in, Frederick, or no? Okay. You've got consumer facing disclosures, detailed product level disclosures. So that's more for professional investors, institutional investors, entity level disclosures, and ongoing product reports on an annual basis. So that I'll talk a minute about the consumer facing disclosure in more detail, but the detailed product level disclosure, we did welcome a more layered approach, but it's not. We were very clear that you shouldn't stop retail investors also from getting that more detailed. I think it will be interesting to see how that develops over the coming year in terms of how the industry communicates that information. The entity level disclosure doesn't kick in until the end of 2025. So firms with over 50 billion AUM have to start disclosing under entity level disclosure from the end of 2025, and then less than or greater than 5 billion from the end of 2026. I will say it very much builds, the UK already have TCFD related disclosures at entity level, and it's very much building on the TCFD. So firms are absolutely not starting from scratch in the UK in terms of entity level disclosure. And then the ongoing product reports, so annual disclosure of product reports, or they can provide on demand for unauthorized or unlisted AIFs, and naturally disclosing on progress and KPI metrics for performance. I just thought it's worth going a little bit more into the consumer facing disclosure. So needless to say, disclosure must be clear, concise, and easily read. No more than 2 pages of A4, and we all have scars from PRIPS, from the development of PRIPS. I actually sat on the ESIS Joint Working Group developing that many, many years ago, it feels now. But I think one thing we try to say to the regulator, we need to get away from this thinking of standardized templates and disclosure, and we're in a digital age, and how can we think about disclosure in a different way? But they have said it cannot be more than 2 pages of A4. The consumer-facing disclosure, it is going to be a standalone document, and that is something we were disappointed about. It's one thing we said, they say their consumer research showed that investors wanted a standalone document. We did our own consumer research that said they absolutely did not want a standalone document. We still have UCITS kids here, as opposed to the PRIX kid, and our consumer testing showed that investors want all the information in one place. That said, it must be a standalone document, and the FCA have said in the policy statement, industry, go away and develop a template. So there's many trade bodies in the UK, as you can imagine. So what we've said is we need to get together. Our members are members of many trade bodies. Let's work together to develop what this disclosure would look like. So that's what we'll be doing. And we've already kicked off that piece of work. The disclosures must be kept up to date in accordance with the label or sustainability related terms, and they've got to be reviewed every 12 months. And every 12 months with progress towards the sustainability objective. They were the key things I wanted to say on consumer. Sorry, don't know where that's gone like that. Nearly finished. Can you see my slides? My computer's playing up on me. Sorry, my computer's playing up with me.
Yeah, maybe you can use the presentation mode.
Yeah, I'm trying. It's not letting me for some reason.
Oh, this works.
Apologies. Yeah, sorry, I'm just gonna have to stick with this way. Apologies, everybody. So don't you just love tech? So with the apologies. So with the distributor rules, distributors must communicate the labels and provide access to consumer-facing disclosure to retail investors. The labels and disclosures must be kept up to date with changes that the firm makes. The distributor must include a notice on overseas products to clarify that they are not subject to the UK regime. And the labels and disclosures and notice will be relevant will be available on the relevant digital medium for the products. The one thing, so I presume you're all familiar with Fin.X and the templates that we use in the EU in terms of communicating the information to distributors. So the EET, what we use for SFDR related information, the EET has already been updated in December to include the 4 UK labels. We had in our conversation with firms, is anything else needed to the EET to help distributors in the UK? And it has been raised that there are UK firms with just UK funds that don't distribute funds in the EU that haven't needed to fill out the EET to date. And with the many mandatory fields in the EET, do we need to do something in the UK just for those UK OICs not being distributed outside of the UK? So that's a question and something that we need to discuss with our members. I think, the obligation on overseas funds, I think that will be crucial and critical, and to see how that plays out over the coming weeks and months. One thing that I didn't mention under the labels slides, the look-through is a very important point that we need clarity on from the regulator. Can firms, say with a fund-of-fund, where many fund-of-funds and mixed asset funds use non-UK funds as part of that makeup, and they can continue to use non-UK funds in the fund-of-funds, but in terms of determining the 70%, do you look through and how much you look through? So that's a question we're very much discussing with our members as well. Just in terms of timing, I've gone through it a little bit, but the key thing for 2024 there is the anti-greenwashing rule is applying from May. The labels are available from July. And then December is the crunch date for all the disclosure requirements the distribution rules applying, and the naming and marketing rules applying as well. And then towards the end of 25 and 26 is when you've got your entity level disclosures, ongoing reports, demands, on demand reports as well. Nearly finished. So just what are we doing to help our members? So we've set up an IA SDR implementation forum, and that's a discussion forum where members can discuss on a regular basis implementation topics. We've done this for SFDR, we've done it for TCFD, and they're really, really popular. You know, our first one on the 9th of January had, 210 people on it. So really, really, really good forums. And, all the law firms are affiliate members as well. So really, really good discussions with everybody on that. We are partnering with the law firm Evershed Sutherland to develop industry guidance to help our members implement the rules. The first phase of that will be published, well, to members, hopefully. I was hoping this week, it'll probably be next week at this rate, but just guidance on if you're updating funds, hitting FCA authorizations teams, application processes, and what you need to do for that, what you need to consider. As I said, we're working with the other trade bodies to coordinate an approach on developing that consumer-facing disclosure. We are hoping to carry out consumer testing ourselves on the 4 labels in terms of helping our members how to communicate those labels to the end investor. It's not about, oh, what do you think sustainability focus means? We've got the labels, they're there. So now it's about how do we communicate them? And indeed, not just to end investors, but through that distribution chain. And we're responding to the anti-greenwashing rule guidance. We offer training to our members on various topics and updating our training for SDR. And we do have a very good open engagement with our regulator, and we meet them quite regularly. So, Fredrik, they were the main things I wanted to go through. I mean, I can go through maybe through when we're answering the questions, how they map to the SFDR proposed rules as well.
I had some question from, it was a bit complicated. Let's see. I lost here. Someone in the audience is asking, what could a hedge fund or any other Article 6 fund today, due to the SFDR then, do in order to prepare for upgrading their funds, considering the new legislative perspective SDR? So I guess, as I interpret it, the question is more like, so what can they do to either, I don't know if that's actually a question about categorization or not.
Well, definitely when it comes to Article 6 funds under SFDR, this was our whole point. They definitely would not get a label. I mean, that's clear. But then the naming and marketing rules would very much then come into force. And if a fund that's currently, say, Article 6 wanted to get a label, there would be a huge uplift needed, and particularly having to develop that sustainability objective as part of the investment objective. So that would be the key requirement and uplift needed. I think, but that said, those with responsible strategies, ESG integration, etc., the naming and marketing rules would then come into force. Sorry, I don't know if I've answered it correctly. But...
I don't know. Okay. Anyway, it seems like also the thing that they were saying about greenwashing, that sounds like general marketing regulation. Like you should not promise more than you can deliver, so to say. So it seems like it's not very specific to sustainability information. It's more like a general principle that is also reimbursed in this setting.
That's a good point, Fredrik. I will say they are getting quite specific in the examples that they provide in the guidance. And one thing, for example, that they're including, which we didn't expect, is images. So like we know I think the UK Competition and Market Authority are currently looking at a firm who used green leaves in and I think this is not in financial services, but this is in a product that you can get in the supermarket, but they used green leaves indicating an eco slant to a product, and they're taking they're investigating that firm. So I think financial firms need to look at this anti-greenwashing rule and the guidance in particular that now includes images. you know, our images, and even just coloring. So I do think it creates a next level. And I think I think the message we're going to start, you know, giving to firms is this is not just about an audit check at the end of the process in terms of checking marketing material. Anti-greenwashing needs to be embedded at the very beginning, from a product governance, product development, product governance, right through your risk management process. So I do think it is leading to a shift in mindset within firms.
Well, another question, in the Swedish market, exclusions is very central. It's a central part of Svanen. Maybe Per could talk about that later on, but still it's very common that almost all funds in Sweden are participating in the UN PRI, and it's also very common that you have quite extensive exclusions in the fund. How is exclusions considered in the SDR?
So exclusions alone will not be able, funds using exclusions alone with no other sustainability investment approach would not get a label under the SDR regime. But you can, under the naming and marketing rules, talk about your exclusion strategies. And you know, that's very much a welcome approach, because we were afraid under the strict ones consulted on a year ago that they wouldn't be able to do that. But the one thing I would say, the big difference between I say proposed, I know they're not rules, draft consulted rules that the SFDR consultation had, but that those categories, I know they're not labels, those categories that the FCA had, that's the big difference. They have an exclusion category, whereas SDR does not. And actually, indeed, in our own response to the SFDR consultation, we have supported the exclusion category, even though we don't have it in the UK, but that bar has been set much higher in the UK.
Now, you're saying something now that the SFDR, they call it categorization, categories. But in your slides, and also now when you're talking, you're mentioning the SDR like labels. What would you say is the difference between labels and categories?
With the label, the FCA have given industry the label. They have given the image that firms put on the fund. They cannot change those images. It was on one of the first slide when I showed you sustainability focus improver, etc. So that is a label. A category then is how you bucket that. I don't know, I'm probably not saying it right, but to me, a category then is how you bucket that theme, and it's how you describe something, because you can have a category without having a label on it, but it's how you then describe it, rather than one image. I don't know if I'm saying it eloquently, but
thank you very much, Carol. Stay with us, and Per.
Yes,
you have been working quite some time now. I think that the first Svanen funds came into the markets in 2017 or something, and now you have like 30 Swedish funds labeled with Svanen.
exactly how many in the Swedish market? Perhaps 25 in total. We're about 65 products labeled. Some more in Denmark, some more in Norway, etc. And we will have asset manager from outside the Nordic as well.
So could you tell us a little bit about your experiences with working with the Ecolabel model in the Swedish market?
Yeah, firstly, I would like to say it's been very interesting for us as an Ecolabel to enter this industry, and really exciting to get contact by a range of stakeholders along the way. Of course, from the fund industry itself, but also from academia, media, politicians, NGOs, of course, all having their saying and their thoughts on our requirements and how we should work. And we have to have a mindset that at the end of the day, not probably all stakeholders will be a little bit disappointed. we can't make everyone happy. It would be very crazy. So you have to have that in mind when sort of entering this market. I could mention another thing. When we first started working in this in 2015, 2016, and finally presenting the criteria in 2017, that was not early days when it comes to sustainable investments, but it was much easier working at that stage. I would say it was much tougher to review our own criteria a couple of years ago and then putting them into the market in 2022. We had to position ourselves in a different way, taking into account a whole lot new regulations, and it along the way they were very unclear what the new regulations was. So it was sort of writing new criteria in sort of a half dark room, so to say. But I would say we as an Ecolabel versus EU may be presenting product categories in a couple of years. We probably have slightly different objectives, function, etc. I would say at the end of the day, our main objective would be to move assets towards more sustainability investment. And so with that said, I would have two main recommendations for the EU going forward. And the first one is very interesting to hear Carol saying that 45 out of 8% would perhaps reach for the UK label here. From a general perspective, from Nordic Ecolabelling, working 35 years in this landscape, if you want to create change, our rule of thumb would be to set requirements so about 30% of the market could reach that requirements. That's big enough to create a change, and it's also big enough to affect how the other 70% of the market is doing their job. Setting too weak requirements will dilute it, and it won't create any change. But it's also dangerous to set too tough requirements. If we end up with a product categorization that allows for 1, 2, 3, 4% of the market to reach that bar, it won't be worth the effort to do the job. It won't create any change, we would say. So having a clear idea on sort of how big of a cake should be is a very clear, important starting point for the Commission when they going forward. And secondly, and it might be sort of the opposite side of my first recommendations, is that you have to apply like a worst case scenario. How would the weakest fund within a product category look like? And if that sort of weak product would that find the trust from the retail investor, then I'll say it's good. But if that weak product won't find the trust in the market when it comes to sustainability, then you sort of have, then you are in, it will be difficult to sort of make any use of the label in general. So having that worst case scenario is very important to have in mind when developing criteria.
I mean, first of all, it's interesting to listen to you also about the proportion of the market that should have a label or could have a label for the effect. But if we say now that 30 out of maybe 800 funds in the Swedish market, or Swedish domiciled funds at least, have the Svanen, it's a little bit low figure.
Yes.
And why is that? I mean, if you have set the criteria so 30% could get a label, I guess, and then what's the problem? Is it too expensive? There's been some criticism sometimes that it's too expensive to get a license or get the label from Svanen with the external auditing and stuff like that. But now, so that's also difference between the UK SDR, that is self-assessment which category you belong to, and then it's a supervision it's a question of supervision from the FCA. So that's a little bit different. Do you think that's if we should have had the same system as in UK, do you think that the proportion of categorization or labeling would have been much higher? Is it a cost issue?
No, I would say the cost is we seldom get questions on cost, and what you sort of pay for us doing the audit and the license fee. I would argue that you probably save that money when you can have much more effective marketing and sales. But I guess it's up for everyone to decide. I have to also precise myself. The 30% is a rule of thumb that we use in general for all our 50-60 areas that we're working. For our requirement for funds, I would say it's more closer to 5 to 10%, where we have ended up with setting stricter requirements so that we would gain the trust from the retail investors. In 2017, it was about 5%, and then it increased quite substantially over the years. So at the end, a lot of funds could reach our requirements. Then in 2022, we sort of reviewed our requirements and we went back to 5 to 10%. Of course, it's hard to measure. But you perhaps asked what we could have done better. And it might have set our requirements even stricter, but it would have been great if we, back in 2017, would have taken into account the double materiality way of thinking much clearer. Now in 2022, with the second generation criteria, that's more of a cornerstone, I would say.
But also you have, I mean, I've heard some comments about Svanen that it's a green claim, so to say. So it's about environment mostly, but then you also have quite a lot of social criteria, and you have exclusion criteria in as an important part of the criteria for Svanen.
Yes,
and that seems a little bit different from your setup now, Carol. That there are no specific exclusions. It's more like 70% of the fund must fulfill the criteria for each label, but it's no specific exclusion criteria that has to be fulfilled. Is that correct?
Yes, that is correct. It is up to that 70% must be aligned to that sustainability objective, and firms have to prove that and show that. I thought it was quite interesting, Per, you said something and it reminded me, the objective of what we're trying to achieve with all of this and what the regulator is trying to achieve. The European Commission made it very clear from the very beginning, the aim of their green finance strategy was to shift capital allocation to more sustainable investments. From the UK perspective, the FCA have never said that's their aim. They've always said it's about informing investors and building trust in the market and having anti-greenwashing. And I think maybe if you had the other objective of that, capital allocation to more sustainable investments, yeah, you might have seen, I don't know, I'm not talking for the regulator, but we might have seen a bit of lowering of that threshold so more funds could get a label. That said, I do think there's going to be many funds that can't get a label today that will be uplifting their funds to get it. So I think we still will see that capital allocation movement, even though that wasn't an objective of the regulator.
Okay, interesting. Well, you asked about exclusions, Fredrik, and yes, it's a very interesting topic and very debated sustainability strategy at the Nordic Swan. We that is one of the objectives, one of the strategies. On top of that, of course, we have the inclusion, transparency, and active ownership. But I would argue that it would be easier to gain the consumer's trust if there were some mandatory exclusions for product categories. It's easier to position the categories, etc. Last week, when I was at a workshop with the EU Commission on this topic, most of the attendees were in favor of exclusions that as a mandatory piece of the puzzle, but we never went into details. But an interesting thought would be to have different mandatory exclusions for each product category.
This is you also told me once that this was one of the problems with the Ecolabel, because it's also interesting to see that there was an initiative from the Commission with a European Ecolabel system. And
yes.
That could have, if you open-minded, you could have thought that that would be the sort of the first way to explore to get a label system, and now it's sort of a development of the SFDR instead. So what happened with the work that was done with Ecolabel, and why did it sort of just go out the window?
Yes, it's. I don't have all the details, but the work started out in 2018. There were 1, 3, 4 drafts out there, and for the last 2 years, the project has been on hold. I guess in parallel to develop these criteria, there were a lot of other regulations that sort of came in place. The challenges they had in the EU label pretty much come back to my main recommendation here to have a clear idea on how much of the market your requirements should sort out. There were so many different stakeholders at these meetings running in all sorts of directions, and there were no clear idea from the Commission where it should land. And at that time, the taxonomy were evolving, and in the draft, they wanted 50% of the fund should be aligned with the taxonomy, and now we have seen it falling out, and the eligibility for taxonomy is so low that setting requirement with 50% alignment would be end up with 5 funds in EU. So that would be one of the problems, and as we talked about, exclusions was, I would say, the main other thing that has stopping up the project, where NGO side, different countries had very different objectives on to what degree and what type of exclusions would be in the EU Ecolabel.
What do you think about the system then? That because it sounds like you are for some exclusion criteria to gain the consumers' trust for the labeling, so to say. What's your thoughts then about the UK? It seems like it's more open. There are certain criteria with a 70% threshold, but still there is no criteria. But I guess that for any fund with a label in the UK, they can express their views on what they have excluded if they have any exclusions as well, like Carol says. So is that a way forward to be more transparent on the exclusions you do have, but it's not connected to the label?
Yes, probably in most cases. Often you sort of, if you have a sustainability strategy, you sort of also try to avoid several type of investments. But at the same time, applying the worst case scenario, we would probably find funds that really pushing and try to find where the lower end of the spectrum is. And we will probably, if there's no mandatory exclusions, we will probably see a bunch of investments in fairly dark gray, semi-black areas that would sort of challenge how the retail investor see these labels.
One thing, I mean, if you have a label, the label is supposed to decrease the cost of information for an investor. It makes it easier for them to find a fund that is suitable for their sustainability preferences. But some of the double materiality disclosure is supposed to give NGOs or whatever, whoever outside the consumer and fund manager relationship also information about what is the effects, the external effects of the investments that are done in the fund. But that's it. Then it comes to the question: a big fund has bigger potential to have a negative impact or a positive impact on environment or other sustainability issues. But so there is a room for proportionality. And I do understand, I think it's fair that Svanen is not using a proportionality and have lower standards for some small funds. But you could argue a small fund could have another sort of disclosure regulation on especially double materiality. And Carol, in the UK, do you have any areas where there are sort of a proportionality and not so tough criteria or regulations for information from smaller funds?
The SDR rules and the naming and marking rules apply across the board regardless of size of funds. I think the proportionality has only come in really with say on the entity level reporting on when that comes in. So for over 50 billion from 2025 and over 5 billion from 2026. But I think, you know, the double materiality, the do no significant harm concept hasn't come into SDR. But that said, the firms have to disclose any negative effects on the sustainability objective of anything that's being held in that fund. So we kind of have a little bit of the do no significant harm via that way, which is understandable completely. But I think the proportionality, I think that goes back to also, you know, the independent verification, allowing firms to do it internally or third parties, smaller firms, the cost for certain things will be more for, but also smaller firms may have maybe only have one fund or two funds that they would be considering for a label as well. Yeah. But I think going back to overall, it's a principles-based approach rather than going down in detail. I think they did that to try and have more proportionate response for the industry.
Yeah, but because there's an obvious problem that with a very heavy regulation on information might be good for the end goal, but still it creates barriers of entry and it's not helping the competition in the market. So in that sense, it's a little bit problematic. Okay, super. I think the time is running out for us, and it's been very interesting to learn more about the UK experience. Thank you very much, Carol, to participate at this webinar, and also Per, thank you for insights on Ecolabel. I look forward to have an ongoing conversation about that even further on. So with that, thank you very much for participating today.
Tack, Fredrik. Good to see you all.
Yeah, thank you. Bye.